Market conditions, majority bullish at 14.0, continue to see that compression at the upper end of the trend, seeing a retest of this demand location, which seems to be holding as of right now, but not a lot of conviction. We'll definitely watch the upper end of this range, currently trading right around that 67.40 range, could go all the way up to that 6800 range for a breakout. Again, this is S&P 500, but we definitely know that there are some things happening, starting some weakness showing here on the breadth of the market. We're showing the number of stocks above the 50-day moving average at 43%. So we've got the majority in downtrends. We're seeing that here as well on the bearish indicator, majority bearish on those stocks. We're also seeing VIX still holding that number up above 20. So we've got majority bullish, excuse me, on the volatility trend, and that is also concerning for the market at these levels, where we're seeing some risk starting to show up in the credit markets, and we're seeing elevated levels of VIX even as the market is moving higher. So some of those internals there, we're looking at this one, which is the number of stocks below or above the 50-day, 43%, and elevated volatility right here, and markets still at all-time highs. There's just some concern on that. Certainly we could get a push higher, and things could certainly move higher and get kind of that exuberant blow off top, or we could just consolidate and compress for a little while and just have a whole lot of nothing throughout the remainder of the year. We'll see what we'll see what we get, if we're going to get some new demand coming in or not. S&P 500 closed out 14.0 on Friday. And again, just some softness in this trend. That large break, that big red bar right there, watching to see if we retrace, if we can hold those levels, or if we are starting to roll over right here. That's the biggest concern right here. So lots of discussion starting to take place on the AI investment, the amount of the investment, when we're going to start seeing some ROI on that, and any other risks that may be happening in the credit markets as well. We're seeing the Dow Jones Industrial Average at 13.1, closing out the week last week. Also triple Qs 14.0, still quite bullish across the board, and where we're sitting in the trend, just seeing if we're going to get some distribution starting to happen here in the markets as well. Still a pretty solid inside bar containing the entire week's worth of activity, all of that yellow activity inside of that long sell-off bar. So not, there was no continuation after that move one way or the other, just a whole lot of indecision at this point. We'll see what we end up getting. We're seeing small cap names, Russell 2000, pull back the last couple of days here as well, switching this over from 12 or from 14 a couple of days back down to 12 and 2. Oil continuing to get beat up here, back to 67.30 on USO, majority bearish on that trend. Seeing gold still having its upper end of this range here. We did see some selling the other day, pulling back just a little bit, or at least some volatility in this expanded trend. Keep an eye on gold. See if we do get some distribution at these levels. We're seeing the 2-year and the 10-year, which are also continuing to drop. Now, the issue with the interest rates right now are lower interest rates can do two things. Number one, the lower the interest rates, it creates additional liquidity for for markets to run, for companies to borrow, for consumers to borrow. It just makes this cheaper. The cheaper this money gets, then obviously that is not, it's allowing for a little bit more lubrication in the economy. That is a good thing. The bad thing is when we need that because the economy is slowing. So if we're getting slowdown already and we're seeing rates drop because of that, that is more of the concern at these levels than it is of allowing for cheaper capital. And the markets will let us know here real soon. They've already obviously priced in any information that is known or anticipated, but we'll see if we continue to see that. That 10-year now is back to 4%, slightly below 4%. And again, if that is based on slowing economic conditions, then this is a little bit more concerning, adding to this camp of higher volatility, adding to the camp of breadth continuing to move lower. We know that the majority S&P 500 is being held up by the MAG, the MAG 10, whatever it wants to be now, MAG 20. There's just a handful of names that are holding up the market currently. A couple ideas to consider today. We are seeing some momentum taking place in some of these names. 33 stocks, PGEN, nice confirmation bar, continuation, some follow through, a little bit deeper retracement to that 618 location. Also seeing MNMD, which is a nice looking pattern. Mind Medicine continuing at nice retracement pullback, found some liquidity here, some demand, and pushing to those upper levels on MNMD. That'll do it for today's update. Everyone have a fantastic day today.